Hello. Today I will be addressing how do I know what student loan plan I'm on and what are the various plans available if you have federal student loan debt in the US. So the first and foremost, you can easily access your student loan information in every single student loan you've ever originated through what's called studentaid.gov. So what you're going to do is when you arrive on studentaid.gov, you're going to go to the login page. If you don't remember your login, you could do what I just did right before this video, which is to reset my password. So you're going to log in to your account. You're going to accept the terms and the conditions, and I'm going to navigate you into learning more about how to find out what plan you're in. So first and foremost, you're going to find out who your servicer is. Mine is Mohila. There's all kinds of information. It's like, where do I find out what my plan is? They don't make it that easy, so I'm going to make sure to walk people through. You click on View Details, and you're going to get to see your total number of servicers, total amount you originated, and you want to click View Breakdown. When you view this breakdown, you're going to view loans. And based on these loans, you're going to see, when did you originate them, what type of loan it is, unsubsidized, subsidized, what status it's in, and what plan you're in. So everybody that gets kicked into repayment is automatically kicked into a 10-year standard plan. What a 10-year standard plan means is that you will pay off the entire loan balance within 10 years, month over 120 payments. That's what a 10-year standard plan is. However, 40% plus of us who take out student loan debt can't afford to pay our fully amortized loan amount. That means if you went to grad school, took out like $100,000 of debt, and you have a payment of $1,000, you're like, oh man, with my salary, I can't afford this. This is why the government has created alternative plans. I want to speak through what are these type of plans and why is it important, even if you can make your fully amortized standard 10-year plan now, why it's important to know about this, because you never know what's going to happen, right? I'm going to use a little bit of storytelling to talk about the use of different plans. But for me, for example, I was on a 10-year standard plan after undergrad, but I knew in order for me to qualify for a mortgage, I had to go on a different plan to lower what's called my debt to income, or the mortgage loan officer would just take my current payment, which was too high with my income at the time, because I graduated in 2008 at the height of the economic crisis. So most people didn't have jobs, let alone have really well-paying jobs. So I came out, luckily I got a job, but it was not the best paid job, right? Because, most people at that time when we had that economic downturn couldn't even get a job. So I didn't start out earning the best. I had great credit score. So for me, all the tips and tricks that I could work with my student loan was able to help me buy a home, okay? So it's important to know about these plans because it's not just about can I afford to pay, but it's also important to understand how does my student loan impact other financial decisions I want to make. So that's a little bit of an example. So all my plans currently, because this is my grad school debt, is in the standard plan. However, I want to talk a little bit about what are the plan options. So I'm going to go once again to studentaid.gov, student loan, and I'm going to type in studentaid.gov, student loan repayment plans, so that we could talk about the various plans, okay? And I want to use the federal government website because that's where accurate information comes from, even though you may not understand it all the time. But let's talk about the plans. Okay. So there's the standard repayment plan. Everybody starts in the standard repayment plan. There are graduated repayment plans. Graduated repayment plans mean it's a 10 or 30-year plan, depending on if it's a consolidated loan with a higher balance. And a graduated plan means that You start with a lower amount, and then every 2 years your payment increases. We don't recommend these plans because you never know what's going to happen in your life in year 4, year 6 of a repayment. Let's say you want to get married, start a family, and then all of a sudden your 6-year payment becomes impossible to pay because you have other financial obligations. I tend to not recommend borrowers get into graduated repayment plans at all because they can become dangerous even if they're not dangerous now. And then you'll have to originate you'll have to enroll yourself in a different type of loan, which may extend your payment. So I just recommend against doing graduated repayment or because it could just be, it's like a balloon mortgage, right? It's like all of a sudden you increase your payment, let's say from 150 to 500. It's like that's a huge jump and you might not be able to afford it in 6 years. You might have a house payment, you might have a child, who knows what your circumstance is going to be. You can never project the future. So I always recommend, and I've seen that happen before where people enroll in this plan because it starts with a lower payment, and then by the time year 6 comes around or year 8, they're like, oh my God, I can't afford to pay it. What do I do? And then they end up extending their payment and all the interest capitalizes and a whole host of not great things happen. So just be aware of that plan. And of course, there's the extended repayment plan, which extends your loan term from 10 years to 25 years. And of course, that will lower your payment. But just keep in mind that there's more interest to pay over 25 years. And if you're graduating from undergrad at 22, you will be paying your student loans for more years than you have been alive. So just keep that in mind, that that can be the repercussion of going on an extended repayment plan, right? And despite some of our best intentions, like, oh, I'll try to pay more later, like you just never know what's going to happen in life. So just recognize that that it may be what you're signing up for. And then we have what's called the income-driven repayment plans, which is what we like to specialize at LoanSense because these are plans that the government gives interest subsidy month over month to help reduce the payment and will qualify you for some type of loan forgiveness, which means you may not pay off the entirety of the loan balance, okay? So there's the revised pay-as-you-earn, there's pay-as-you-earn, which are new plans, and then the older income-driven repayment is the income-based repayment. There's also income contingency repayment, which are for Parent Plus loans. And these are all income-driven repayment plans. They're calculated slightly differently. I'm not going to go into all the nuances of how they're calculated for the purpose of this video, but they tend to be advantageous from a student loan forgiveness perspective, especially if, let's say, you're a public servant. These are good plans to enroll in if it reduces your payment compared to the standard, so just standard plan. Just to keep in mind, if you have a student loan balance that's the same as your annual income, so let's say you earn $80,000 and you have $80,000 of student loans or more, you're a great candidate for the income-driven repayment plan because it will lower your payment pretty significantly and you will qualify for loan forgiveness. If you're not quite sure, our software can help you also determine and review what the best plans are, considering your marital status, your dependency status, your employer status, the various factors. And of course, we can also help you understand the implications of enrolling in a different program from the standard plan to other life goals you may have, like buying a house, getting married, etc., whatever it may be, going back to grad school, right? And just planning for that. So I hope this helped answer the question of what plan am I on and how do you get that information? You can also, frankly, go straight to our website to really, without logging to the government site, you could answer these questions. This is our software. It's app.mylonsense.com. You can go ahead and upload your loans. It'll require you to connect with the same password credentials from the site we just showed you, studentaid.gov. If you don't remember it, there's also a reset button right here. And after you let me just move this. After you upload your loans, you're going to get a completely free recommendation and analysis that you'll see right here. It'll show you the difference in your repayment plan, your monthly payment. It'll show you the difference in the projected payment. It'll show you your projected forgiveness, okay? It'll show you other plan opportunities like extended fix. We don't show graduated because we just believe that's not a good plan for people. If you have questions, you can chat us. You can also schedule right here to speak to somebody. We also have a really handy dandy, especially if you're married, tax tool to determine should you file your income taxes jointly or separately from your spouse so that you can realize the most savings. We have various tools here that's super helpful, but essentially know that once you hit this page, you click enroll, and it's like a TurboTax experience for student loans, where you'll answer some questions and you'll hit submit, and we'll send you eDoc signatures and help facilitate and make enrolling in any plan easier. The best part is we invite you to workshops where you can actually speak to a student loan expert who will also organize all your loans, by the way. So speak to a student loan expert to ask your pressing questions about your financial goals. But it's really pertinent that we know, what is our current plan? What is the recommended plan? Who your servicers are? And that's just really vital information. I hope it helped. If you found this video helpful, please subscribe. Please like, please comment. Thank you for your time today.